Hello everyone, and a very warm welcome today to this ICAS webinar on making tax digital for income tax, the impact on the construction industry. So for those of you who don't know me, I'm Justine Ricomany, Head of Employment and Devolved Taxes here at ICAS. I represent ICAS at several HMRC and industry forums, including HMRC's Employment and Payroll Group, the Employment Status and Intermediaries Forum, and the Construction Forum, which I co-chair all three of those actually. And I also chair a collaboration between ICAS CIOT, Law Society for Scotland and the Scottish Government on Scottish taxes. And I'm a member of the CIOT's Scottish and Welsh taxes committees, amongst other things. So I would have loved to have introduced you to the lovely Rebecca Stewart this morning, but unfortunately Rebecca is not feeling very well today. However, we have her amazing colleague Lenny Barry, who is a stakeholder manager for agents at HMRC. Before we begin, just a few housekeeping matters to remind you of then. You can submit questions at any time through the Q&A facility, which can be accessed at the top of your screen. Questions can be submitted anonymously. We'll be saving all the questions until the end of the webinar for the live Q&A session. Please also join the conversation today through the chat box accessed at the top of the screen. This allows you to comment or discuss with fellow attendees on matters covered by the webinar. We are, of course, recording the webinar and we'll make it available for on-demand viewing afterwards in case you want to refer back to it or share it with others. The slides will be available on the events page on the ICAS website under the event listing. We look forward to receiving your questions throughout the course of the webinar, and of course, we will try and get to as many of them as possible. I know that there is a huge amount to get through though today, so let's get straight into the detail of today's webinar. So over to you, Lenny.
Thank you, Justine, and apologies to your attendees because it's not Rebecca. I'm not as good looking, unfortunately, but I'll do my best to educate, inform you about making tax digital. So I'm just going to call up the screen. Hopefully people can see that. Yeah.
I can see it now.
Okay, brilliant.
Yep.
Okay, so as Justine said, my name's Lenny Barry. I work on the MTD programme. I've worked there for 7 years, been through VAT and now income taxes coming along, and we are good to go. If there are any doubters with us, I don't know what I can do to convince you. Yes, we have had a little bit of a rocky road to get to this point, but we are absolutely 100% ready and committed for April 2026. So it's really important that agents now start to get ready for MTD for income tax. So today we'll speak about MTD for income tax, a little bit of how it impacts on the construction industry scheme. And I believe a lot of you may have clients who are either contractors or subcontractors, and we should hopefully give you a little bit of information about that. So I'm pretty sure a lot of you will have some knowledge and information about MTD for income tax. I know that Justine and Chris Campbell, I worked with Chris Campbell when he was at ICAS delivering webinars for agents on MTD. So we've done some presentations for ICAS.
Apologies, Lenny, just quick interruption. I think the audience is still stuck on the title slide. So if you make sure you use the arrows on your screen to flick through rather than like your keyboard, just make sure we're on the right slide and everybody can see that. So if you go and click on the slides you're on at the moment.
Yeah, so is it moving now?
No, we're still on the ICAS title slide.
Okay, that's confusing.
Are you able to clear?
I can see slide 5 on my screen, Flo, which
Oh,
is the first title slide. Yeah.
That's all right. Apologies for the interruption. That's all good then. Thank you. Keep going, Lenny. That must be on my side.
So it should be on an agenda slide now.
Yes.
Marvelous. See, I told you technology was wonderful. So some very quick background then about Making Tax Digital. We'll talk about the overview. We will talk about the testing program, which is really important for agents to look to bring clients into testing this year. This is the last year of testing. This is your last chance to come in and get a feel for it for real before we go live in April 2026. And then there's just a couple of bits about the construction industry scheme in particular.
Lenny, we're getting a lot of people saying that their slides aren't moving, so I'm just checking. Have you taken control of the slides at all?
I have.
Yeah. Yeah. It looks as if people are having to use the arrows themselves rather than actually rather than us changing the slides, which is a bit weird.
Yeah. So, what would you like me to do?
You tell me which slide you want to be on, and I'll move the slides if I can. Let's do that.
Yeah, okay. So if we go to my slide 3, it's just a transition slide about making tax digital for income tax.
Okay, great. So that's that one. Yeah. I don't know if everybody can see that. Give us a thumbs up if you can, please. It should be a slide that says about making tax digital for income tax with a big orange circle around it. No, it doesn't look as if people can see it.
Have you taken back sharing, Justine?
No, I've not taken control. No, I'm just clicking the arrow at the bottom of the screen. Flo, have you got any ideas about this?
What I will do is I will take control and I will move through the slides. So let me know. So we should be on this one or?
Yep,
yeah, it should be that one. Sorry about this, guys. I don't know what's happening.
Brilliant. Okay, so making tax digital for income tax. Next slide, please, Flo. So what it is, it's the new way to declare your income and expenses and your tax return for sole traders and landlords. Those are the qualifying incomes. Only income from self-employment and income from rental property. So when we consider the threshold at the points people will come into making tax digital, it's only self-employment and property. So we're not considering PAYE or dividend income or pension income. Those remain separate. So the big question is my self-employment and my rental income above 50,000? I'll come in April 26. If it's above 30,000, I'll come in April 27. And if it's above 20,000, I'll come into MTD from April 2028. So moving on to the next slide. Taxpayers will need to know about several key changes compared to their current self-assessment arrangements. So taxpayers in MTD will need to obtain MTD compatible software, and this software will enable them to create and store digital records of their income and expenses, send quarterly updates to HMRC using that compatible software. And finally, they will submit their tax return by the 31st of January the following year, as they do now, but it will be done in MTD compatible software. So one of the benefits of making tax digital, and I promise there are benefits, one of the benefits of making tax digital is that there will be a greater increased auto population for the digital tax return. So we'll bring in what we know about the taxpayer from RTI, PAYE, CIS deductions, all state benefits, including the state pension, benefits in kind, expenses, etc. So anything that we've already been told, we will populate that into the tax return. So MTD for income tax, we're currently in the second testing phase. So in 24-25, we brought in a small group of customers to be able to test key functionality, make sure that it worked, make sure that we could get the information that was being sent to us in the correct format. That all worked fine. So in 25-26 this year, we're extending it to include more customers, to test that at volume, and also to make sure that we get as many income types in as possible. So I don't know, maybe we're looking for 5,000 people to come into testing this year. If they were all self-employed plumbers with no other income sources, that would be helpful, but that means we're only testing one type of customer. We're testing a self-employed customer with no other income sources 5,000 times. Now, we don't need to test it 5,000 times to make sure that it works. We can do that with 5 or 10 tests. So it's really important that we encourage agents to bring in clients who have multiple income types. So the likes of one of the ones that sticks in my mind is we don't have many who have student loans. So it'd be really good if we can bring in some people with student loans. My own personal wish, I'd like to test all 17 of our income scenarios. And I personally would love to test that with every single software provider so that we're testing their software to make sure it works on their back end as well as it works on our back end. And to do that, we need agents and clients to step forward, come into testing, see what it looks like, help us find a mistake. Surprisingly, in testing, if we find something that's not working, that's absolutely brilliant. We can get that fixed. We would work with the third-party software provider. We'd get it resolved. No detriment to the taxpayer or the client at all. And if we can get it fixed in testing with 5,000 people in, it's going to be a lot better for the 800,000 coming in next April. So April 26, those with qualifying income of over 50,000 will come in from April 26. Those over 30,000 come in from April 27, and those over 20,000 qualifying income will come in from April 2028. So just a quick reminder, if we go to the next slide, we would remind you that making tax digital for income tax requires compatible software. Many of you will be using the software products for VAT or for self-assessment now. Just make sure that if you have a particular favorite, make sure that they will have an MTD for self-assessment product available. There are 22 products available today, including most of the big ones. So just make sure that they will enable their self-assessment product for you to access. If you are not sure about what products are available, we've got a list of those recognised products on gov.uk. If you go into gov.uk and search software for making tax digital for income tax, then it'll pull up the list for you. digital records have to be kept now. So the days of paper invoices and receipts are going to become a thing of the past for us. How many taxpayers, tradespeople get petrol for their van, and as they're closing the door, it flies out the window or it goes down the back of the seat or whatever. If you haven't got the record, then you can't be able to claim it back. Whereas in some software, you've seen them on the telly, take a picture, it goes into your software, you can do it instantaneously, reducing the risk of losing it. The taxpayer or someone on their behalf will have to send quarterly updates. That's the summary totals of income and expenses in that quarter, and it is the categorized expenses and income. So as you categorize it in self-assessment now, you'll be doing that in real time. Your software will then say to you, hello, the Q1 is ended. This is what I have. Do you want me to send it? And someone has to press the button to say, yes, please do. And then later on, after the Q4 submission, you will do your normal end of year process. You'll do the tax and accounting adjustments, you'll claim reliefs and allowances, build the tax return, agree that with the client, and then submit your digital tax return via your compatible software. And as when in any tax regime, there will be a penalty system, as there is a penalty system in self-assessment just now. But we're going to change that towards a system that is more akin to that which we brought in for VAT. So it'll be a penalty-based points system. For example, if you miss a quarterly update, you would get 1 penalty point. A financial penalty would not be applied until you reach 4 penalty points for the quarterly updates, and you can have the points drop off for a period of regular and consistent compliance. So some people say, oh, penalties, I don't like penalties, but to be fair, we believe that these are more reasonable, more fair. So at the moment, if you miss submitting your tax return by the 31st of January, you submit it on the morning of the 1st of February, it's an automatic £100 penalty. In Making Tax Digital, that wouldn't happen. You would get 1 penalty point for not submitting your tax return. You would have to have 2 penalty points for not submitting your tax return before you would obtain a financial penalty. So like everything else, if people do what they are supposed to do, it'll be absolutely fine. So if we just move on to slide 12, Flo, that'd be great. So what are the benefits of Making Tax Digital? We believe that digital record keeping will help minimize mistakes and make it easier to spot errors earlier, and that will reduce the burden and the potential complexity of later corrections. We have made available an HMRC tool to the software developers to plug into their software for Making Tax Digital. We call it HMRC Assist, and HMRC Assist will look at the information being sent to us in the quarterly updates, and more importantly, in the tax return. It'll get run through HMRC Assist, which goes and checks what do we already know, what do we already hold, are there any obvious errors. Now, the example that I use, if you are declaring a taxable income of £54,321, 54321, and then later in the tax return you confirm your taxable income, but it's actually being keyed in is 45,321, 45321, then HMRC Assist will pick that up, because both answers cannot be correct, and we just want to find out which one you wish to declare and to input. So we will not accept the tax return at that point, knowing that it's wrong. We will send it back with a message that says, can you please check? You have two different answers for the same question. Which one do you want to do? Obviously, if you've declared 54 and then it's been transposed to 45, that reduces your taxable income and therefore your tax liability. We would hope it would be corrected to 54,321, but the taxpayer can still overwrite it and say, no, it's 45,321, and then we would submit it on that amendment, and that's fine. If that means that it gets changed back to the original 54,321, then that's right tax, right time. It's less likely to get picked up for an inquiry. It'll be 3 years down the line. We say there's something wrong. Taxpayer may have to get their accountant to go look for it. That would be chargeable. And it's a lot of time and effort and money that goes into correcting errors. If we can get them at the first stage, it would be so much easier for everyone. So we believe there'll be potential for time savings. Digital records are faster, more reliable than paper records. You don't lose receipts as easily. Equally, a lot of taxpayers, for some obscure reason, save everything up to do the tax return well after the end of the tax year. And that means there's more time when something can go wrong or get lost. But it's a case of, if you are doing the quarterly updates, you're keeping digital records in a real-time way, then that is less likely to be an issue, and you should save time. Again, potentially, the in-year tax estimates that we can provide after every quarterly update will give an indication to taxpayers what their final tax liability may be. Now, if you are a flatline business, if you're an electrician and it's steady work throughout the year, then the tax liability isn't going to be a mile off. It's going to be there or thereabouts. Is it going to be perfect? No, of course it's not. So everything depends on the records that are being created. Are they up to date? Are they accurate? Based on that, we will make an assessment on the tax liability. We will take into account your personal allowance, but of course we know that end of year there will be tax adjustments, there will be financial adjustments, there will be reliefs and allowances that we can't forecast, and they will reduce the tax liability. But it's incredible the number of taxpayers who do not know how much tax they owe. So they go to their accountant in December or January, bring in their bag of receipts or their books and say, I think I owe them £3,000. Accountant does their business and turns around and says it's actually 7,500, and the taxpayer has kittens because he hasn't got 7,500 in the bank. When asked why not, he says, well, the money was in the bank and we went to Disneyland in half term. But sometimes they seem to forget that it's not all their money. It's something that they're holding on behalf of HMRC that they're going to have to pay. So if that helps people get a better idea of what the tax liability is, helps them think about planning to be able to pay it at the right time, then again, that helps everyone. And better tax management. So with the software, you're able to categorize your income and expenditure there and then, rather than waiting for the end of the year to process it all in one go. So moving on, compatible software is a key component to making tax digital. What do we mean by compatible software? So compatible software is a product that has been developed by a third-party supplier and allows an agent or their tax or the taxpayer themselves to be able to comply with the requirements of making tax digital. So choosing software is really quite important. As I say, many of you will be using products just now that will be adapted to become compatible with Making Tax Digital for income tax. Again, we are looking for software that creates, stores and corrects digital records for self-employment and property income, income and expenses, summarizes them, makes the quarterly updates to HMRC, and will receive information back from HMRC, such as the tax estimates or the nudges and prompts from HMRC Assist, and will also allow you to submit the end of year tax return. Now, many people ask us, why aren't HMRC providing the software? To be absolutely honest with you, HMRC are not specialist software developers. We simply could not resource the development, the maintenance, the updating of the software, and equally we certainly could not provide the level of customer support that would be expected with those software products. Third-party software providers, that's their day-to-day job, and they were far better able to achieve those outcomes on behalf of taxpayers and clients and agents. Many people say it's expensive. Software will be available providing a range of functionality. Software is also available at a range of price points. So you choose the functionality and the price point that is most appropriate for you or your client. And that would include free products. Now, there are some free products showing on gov.uk software choices pages today. We expect more of those to become available throughout 25 and into 2026. I think we have to be reasonable and say that software developers have invested a lot of time and money and effort into creating the products. They want to sell subscriptions to those products as much as they possibly can to get a return on their investment, but many of them have committed to versions of the product. Obviously, the full product wouldn't become available for free, but the minimum functional requirements are likely to come as a free product at some point later this year and into 2026.
Lenny, can I ask you a question?
Of course you can.
I was just wondering if anyone is eligible to opt out, and if they're eligible to opt out, on what grounds might they be eligible?
Opt out? Opt out? Who would want to opt out? What a strange notion. So as with MTD for VAT, there will be exemptions. And people can apply for an exemption. The exemption process for MTD for income tax will open in the autumn. So the criteria would be, is it unreasonable or impractical for a taxpayer to meet this? Whether you're part of a religious group or society that prevents use of technology. One of the other ones we quote, which isn't overly helpful, I would say, is age. So people will often ask me, at what age will I be given an exemption for MTD for income tax? And there is no answer to that question. I know 80-year-olds who are wizards on technology. They are more than capable of doing it. Equally, I know some 20-year-olds who have no idea how to use the technology. It's all dealt with on an individual case-by-case basis. I would probably advise that if you write in and say, I have a client who's 80, can they have an exemption? Then the answer is going to be no. If they live in a rural area, if they have poor broadband connectivity, if they have a medical condition that means that it's not possible for them to do it, then those should all be included in your application to increase the chance of it being accepted.
Thanks, Lenny.
Okay.
It just occurred to me while you were talking about sort of return on investment and stuff like that, because you were saying about upfront costs, fee, free things that are going to carry a cost. So I was just wondering whether, has HMRC done any kind of scoping work with software providers that you might have listed on your website, for example, to work out sort of for the accountants amongst us, you know, what kind of investment will accountants or business people have to make into the software, and will it actually, is it going to be overall cheaper to do this, or is it actually going to be more expensive? Because I think that's probably a huge concern for most people out there, I would have said.
Yeah, I mean, I'd probably have to say that there is an increase in work in terms of the quarterly updates, and that's the thing that worries most accountants that I speak to. But that's why it's really important people come into testing. So people say to me, how long does it take to create a digital record? Well, that depends how skillful you are at data processing, who's doing the data processing for you, and if you're relying on the client to provide you with the information, how reliable is the client? Are they going to bring it to you or send it to you every week, every month? And if they don't, then you're probably going to have to chase them a little bit, which adds to the time and the cost. Now, I would be pragmatic and say that this is a significant change for taxpayers and their agents. HMRC fully understand that. Are the quarterly updates going to be 100% accurate? No, they're not. The tax returns are not 100% accurate now, so why would the digital records begin to be 100% accurate? But if every quarter it's getting better, it's heading towards where we need to be, and that's the journey that we need to start. And at the start it might be a little bit bumpy, and we understand that as well. So I would say to accountants, you have a duty to try to encourage your client to comply. If the client doesn't manage to do that every quarter on time, then do not allow a quarterly update to be late. Submit what you've got. Don't get a penalty point simply because, I don't know, the client is on holiday, or he's forgotten, or he's ill. Then best endeavours, what have I got? Submit it. Don't get a penalty point, and then encourage them to catch up in quarter two. And yes, that will be a bit of a faff to begin with, but in time, people will get into the habit. Quite a number of clients will hopefully see the benefit of it. They can see in real time how much money they've got, what their cash flow is looking like, because the digital records will help provide that information. Some of them don't want it. That's absolutely fine. Bottom line, it's a legal requirement. The other big question we get from agents is, how much do I have to charge for this now? And again, I get a variety of answers from agents, and that's partly because they don't actually know yet how much work is involved, which is why it's really important to come into testing. Bring 2 or 3 clients into testing. If you've got a client on software, potentially that's not going to be a big deal to do the quarterly updates. If they're inputting the records into the software will calculate it. The software will tell you this needs to be submitted. It could be a few pounds to do that. Equally, if you're needing to chase them, that takes a bit more time and effort. But I had an agent say to me, I do tax returns for a fixed fee of £400, but because of the quarterly updates, it's now going to be 5 times £400. And that is frankly outrageous. The amount of work involved in the quarterly updates, even with a chase, is nowhere near the amount of work involved in the tax return. Equally, I was with 2 sole traders in Bangor, Northern Ireland. I explained it all to them, and they went, that's not as bad as we thought it was. It's not as bad as what we were being told, but we'll still have to charge people more. I said, yeah, it's fine. What were you thinking? And they said, 15%. So they were charging £200, that's £30 more over the course of the year. So there's a bit of a difference between 15% and 500%. And generally, if you estimate and you overestimate the costs, it's difficult to bring it back down. And that's why really, for the benefit of the agents and their clients, we really do encourage you to come in with a client so you can see for yourself. I could tell you it's X amount of work, it's X amount of pounds more, but you have to see it for yourself. You have to run your business on facts. And the only way you'll get those facts is coming into testing this year with 2 or 3 clients. See how much time it is for the quarterly updates. See how much effort you have to put in to the clients, chasing them or educating them, supporting them, and then how much is going to be required for the digital tax return, which should be less than the tax return just now because of the increased auto population.
Okay, Lenny, thanks for that. There's a lot to get used to, isn't there? There's big changes, but yeah, let's move on because well, it's 20 to 12 already.
Doesn't time fly when you're having fun? Yeah, so moving on to slide 14 then, digital records. What do we need to keep? It's your income and expenses from self-employment and property. So your income includes sales, takings, fees, expenses, all the usual categories for your self-assessment return now, stock, fuel expenses, office costs, financial costs, legal fees, etc., etc. And the same for property. At a minimum, the detailed digital record should consist of the amount, the date when received or incurred, and the category. Many people will have VAT records, VAT receipts, and you can use them. They'll have more detail, which is absolutely fine. They'll have the bare minimum and more. And you will still need to keep the original records or a copy, a digital copy of those records. So if someone sends you an invoice in the post, you could scan that, photograph it, and upload it into your software. There would be no need to keep the paper record anymore because you have a digital copy, and then they will be used to help you complete and correct your tax return.
Thanks.
Sorry.
Yeah, sorry, Lenny. Thanks for that. I think the thing that's making me feel a bit nervous about it, and it may be mirrored in the people that are watching it as well, or it might not be, but it's the idea of getting rid of stuff.
Yes.
You know, I'm obsessed with keeping receipts. I was always obsessed with keeping receipts for my clients when I was in practice, and I think the idea of almost getting clients to keep their own digital inputs and then discard the receipts is nerve-wracking, actually, because then you've got nothing to back it up if something does go wrong. But maybe that is people's own choice. They can keep
them if they want
records,
to. Of
or
course they
speak
can.
to their accountant about what they want to do collaboratively or something, because it gives me the heebie-jeebies.
You can still keep the paper record if you wish, but it would have to be digitalized to come into the system.
Yeah.
As you can imagine, HMRC, a massive government department, we used to love paper. So I did a project 10 years ago, and we got rid of 115 metric miles of paper records, and we digitalized them. Now, could something go wrong with that? Possibly, but paper records, if they're in the basement, a flood could happen and you could lose them that way. And it's about doing the best thing for you. I mean, those 115 metric kilometers were in massive warehouses across the country, all of which carried their own risks of vermin infestation eating the papers, floods, fires, break-ins, all sorts of things. But we put our faith in technology in so many things, and usually it comes out okay. So moving on to slide 15 then. If you've got more than one business, so if you're a plumber and you've got a rental property, then you keep separate records for those. And then you would submit a quarterly update for each of those businesses. And people go, oh, well, that's a bit of a faff. But we do that just now with the SA 103 and the SA 105. And if you're in the habit of creating digital records on a weekly basis, say, it'll become less onerous overall than trying to piece that jigsaw all together at some point in January. If you have a property business, we would class if you've got more than one property in the UK, we would class that as one property business. Equally, if you have property overseas, we would class that as one foreign property business. If you've got property in several countries, we would just ask you to keep the records on a country by country basis.
Okay.
Okay, so moving on. Quarterly updates. These are not tax returns. They are the summarized, categorized summary totals of what's happened, income and expenses, in the 3-month period. Now, you'll submit these from the software each quarter. The software, depending which one you choose, will probably tell you what your obligation periods are. It will pop up and say, this needs to be done. What do you want me to do? This is what I know. This is what I've pulled together by categories. Do you want me to submit it? Yes or no? And again, people say, well, blimey, I've got 100 clients. How am I supposed to check 100 things in the next 6 weeks before they're submitted? And the key is the digital record. So if you are keeping the digital records up to date, you could simply look in to the digital records if they're being shared with you via the cloud. You could go in and look at Lenny Barry's records that he's keeping, and he's got the records up to the 5th of July. Well, that would be amazing because that's the end of the first quarter. If he's up to the 30th of June, I'm not going to jump up and down because that's pretty good. If he's up to the 16th of June, is he going to send you any more before the submission date on the 7th of August? Wait and see. If he's only on the 27th of April, then he's not really up to where he needs to be. So it's a case of give him a little prompt, see if he can get any more. But as I said earlier, come the 7th of August, submission day, submit what you've got. You probably know that it's not 100% complete, but there's no penalties for inaccurate records. And I'll be honest, when we get that information, we don't know at that stage if it is accurate or not. It could be that he's only had 4 jobs in the quarter. That can happen. We wouldn't know for certain that there was stuff missing. So we will only find out at the end of the tax year, and the tax return comes in, and we can go, oh, hang on a minute, there was more transactions and he didn't put them in. And we would encourage and support people to do better with every quarterly update. This is not a sledgehammer. We are not going to come out rattling our saber saying, oh, you've missed a line of transactions. It will take time. And I want agents to believe that we understand accountancy is pretty easy if you didn't have clients. Tax administration is really simple if you didn't have taxpayers. Your clients are our taxpayers. We fully understand their idiosyncrasies and their inability to do simple things on time. But between us, we will encourage them to get it better quarter by quarter to get us where we need to be. It might take us a year, it might take us 2 years, it might take us 3 years. We've got 3 mandations coming. They'll still be coming in with the same bad habits year after year, but we will get there. And genuinely, we believe when this is in and embedded, this will save accountants a lot of time and make time available to do more advisory work, which is what we hope can happen. Small businesses are brilliant. They're the backbone of the country, but they could all do with a little bit of extra help. And that capacity isn't necessarily there in the industry just now. People don't like change. I get it. MTD for VAT came in. People said, oh, it's dreadful. It will never work. Now people do it without batting an eyelid. It's just overcoming that initial inertia, initial resistance, the initial hump, and then hopefully things will get better going forward. Let's go on to the next slide. Spoken of the quarterly updates. Now, unfortunately, we have to work to the tax year. Obviously, if you were starting a new system, you wouldn't start on the 6th of a month in the middle of the year, but that's where we are. So the quarterly updates are the same periods for all taxpayers who are required to submit them. So the first quarter is the 6th of April to the 5th of July, and the deadline for submission is the 7th of August. You can, if you wish, in your software, elect for a calendar quarterly update. So that would then become the 1st of April to the 30th of June, but the filing deadline would remain the 7th of August. That election to a calendar quarter can only be done in your software and has to be done before you submit your first quarterly update. It would then remain in place ad infinitum until you or the taxpayer decides to change it in the future. So moving on, there's the good news, the penalties. I spoke about these earlier. Late submission penalties. Only when you reach 4 missed submissions, you would trigger a financial penalty of £200. Penalties drop off with period of compliance. So in theory, it is possible for people who make occasional mistakes and miss deadlines not to receive a financial penalty at all. Late payment penalties, obviously we are very keen that people pay their tax on time. So late payment penalties will be built around the idea that the sooner you pay, the lower your penalty rate will be. Late submission of a tax return, as I said, it's an automatic £100 fine now. It'll become 1 penalty point. You would need to be late submitting 2 returns before you would get a £200 penalty. And again, with careful management and making sure you know what you're doing at the right time, you can avoid these penalties with some ease.
And Lenny, is the penalty, does the same penalty regime apply to people who are taking part in the testing process?
Yes. So if you come into testing, you will be in this new penalty regime. Some people say, oh, why would you have penalties in testing? So for the quarterly updates, if you're late submitting a quarterly update in the testing year, we will not issue a penalty point. So it's almost risk-free to come into testing in regards to penalties. There would be penalties for late submission of your tax return and late payment, and that's exactly the same as happens in classic SA now. So even if you stayed in SA and didn't come into testing, you'd have the same penalties. It'd be a slightly harsher regime than the one that will be in MTD, but I personally genuinely believe that the penalty regime is more beneficial for taxpayers and allows them to make one-off mistakes without getting an immediate penalty. So hopefully, again, I say people will come into testing, make mistakes. That's what testing is about. There'll be no penalty for the quarterly updates. And then moving on, we're obviously telling you a lot of things that are changing, but some things will remain consistent. You'll still finalise your tax affairs and pay any tax due by the 31st of January. People say, if we're doing quarterly updates, do we have to pay quarterly? There is no change to the payment dates of the 31st of July and a payment on account in payment in January and a payment on account in July if appropriate. You will still have to keep business records to support your tax return. It's just that these are now in a digital format rather than bags of receipts. You'll keep records of any non-business information that must be submitted in your tax return. So that's like your pension income, PAYE income, dividends, bank interest. That's exactly the same as now. And you will self-assess and declare that the tax return is correct and complete to the best of your knowledge. And fundamentally, the SIS scheme isn't changing as a result of making tax digital either. So I'll talk about that in a second, but I just want to move on to the testing program. If we can go to the next slide as well, Flo, please. So the testing program is really important, and genuinely, I believe it's important for agents. We've got thousands of people in testing now. We're getting the transaction testing, which is what we want. We're wanting people to get more confident using MTD software. So if you come into testing, you'll see with the MTD software how it works, what it does. You'll build confidence before you have to roll it out to all your client base. If you come into testing in 24-25, then we have a dedicated customer support team. The dedicated team will be with you throughout the year. If you have any queries on making tax digital, you can phone, you or the client can phone the support team Monday to Friday, 8 till 6. These are colleagues based in Glasgow who have been through MTD VAT with us and are all self-assessment advisors. It's the best that we've got. At the moment, the wait time on the customer support team is 7 seconds, which is slightly better than you get when you go to the self-assessment helpline. Genuinely,
only slightly.
And it is genuinely, they're there to help. Some things you might not know, they can provide you with information. Something might go wrong and they will work with you and your third-party software to get it resolved. No detriment to the client. The client won't get penalized for anything. If our software doesn't work, that's our fault. If third-party software doesn't work, that's their fault. We work together to get it fixed and we catch up for the client. And that makes it so much better for everyone coming in April 26. It'll give an agent a gradual introduction to the new processes in the software. It'll give you factual information on how long does it take, how much effort do I have to put in, what resources do I need, and how much am I going to have to price. And that can only be done with factual information. And I spoke about the penalty regime. Nobody likes penalties, I understand that, but it's a case of there has to be a penalty regime. And we believe this one is fairer and allows people more chance to make a mistake and not be penalised. Moving on to the next slide then. Who can sign up now? So people can sign up to testing now. If you make sure their personal details are up to date. It's amazing how many taxpayers and some agents change address and don't tell us. So get in and update your designatory details. Must be a UK resident at the moment, only because we've not built the non-UK resident bit yet, because we're dealing with the 80-20 rule. We want to build what's going to be used by most people first. You must have a UK national insurance number. If you don't have a UK national insurance number, then you will be exempt. You must have submitted at least one self-assessment tax return, or an agent has submitted it on your behalf. So if you created a self-employment business now, you wouldn't be coming in to making tax digital until you've submitted one tax return. Your tax records must be up to date, and your accounting period must align with the tax year or from the 1st of April to the 31st of March if your software supports that. The two biggest reasons, I'll be honest, the two biggest reasons that people can't come in are those with time to pay arrangements, we've not built it yet, and those with a compliance inquiry, we've not built that yet. They'll all be built for December or for January or for April. They'll all be ready. There are probably 1 million people mandated for Making Tax Digital who are eligible to sign up right now. So one of the other things, we can move on to the next slide. One of the things we were asked to do was to create a multiple agent solution. So at the moment, only one agent can represent a client in any of our tax regimes. For Making Tax Digital for income tax, we've built a multiple agent solution for MTD for income tax only. So a client, a taxpayer, can have a main agent who will be doing their tax returns. There is now a role of supporting agent who are more likely to be able to do your digital records and submit your quarterly updates. Now, many accountants say to me, I trained for years and qualified as an accountant, not a bookkeeper. I don't want to do the quarterly updates. That's absolutely fine. Just make sure you tell your clients and help them find a solution. Now, that solution could be a bookkeeper. You could create a strategic alliance with that bookkeeper. Lots of sole trader agents probably couldn't afford to engage a bookkeeper full time. But if you've got 4 other agents in the town and they can't all afford to have a bookkeeper themselves, collaborate. If you all use the same bookkeeper, you're not paying 100% of the cost, you're paying 20% of the costs. Or you could, of course, say to the client they can keep the digital records themselves, although many agents think that would be quite risky because you might get something you don't want when they come in at the end of the year and it's a load of old nonsense. But those are the choices you have to make. Moving very quickly on, conscious of time, moving on to the CIS scheme. And to the next slide, please. Yep. So you're all very aware of the CIS scheme. Contractors, subcontractors, contractors make deductions, send it to us quite often. Sometimes they don't. That's a bit of a nuisance for all concerned, particularly the subcontractor. But in terms of Making Tax Digital, going on to the next slide, Making Tax Digital. So this is the current flow diagram for CIS. There it is. So the contractor does his bit, subcontractor does his bit. Generally, the subcontractors are particularly keen to get the tax returns done so they can claim a refund. And onto the next slide.
Oh, yeah.
So this would be the flow for the process under Making Tax Digital. Pretty much the same, other than the subcontractor now submits a quarterly update so that their records will be up to date every quarter, and in theory, come the 6th of April, their tax return could be ready to be compiled, and that could get them a refund faster. So pretty sure the subbies would like to get that refund as quickly as they can. The sooner they can get their tax return, to get their information into their accountant to start putting it together, the better. And one of the benefits of digital records is that the subby can, if they're doing it themselves, they can send their records by email or digital transfer to their accountant. That on the evening of the 5th of April, the accountant could start work on the 6th of April on their tax return. I know some people say, oh, it's all different, it's all new, it's not going to be easier, it's not going to be better. Time will tell, and we believe, yes, there will be some improvements for some, there might be some challenges for others, but overall, we believe this will be a benefit. And in, I don't know, 2-3 years' time, agents will say, do you know what? It wasn't that bad. It's actually quite good. Fingers crossed. So that's all I've got to share with you today. I hope my colleagues have been answering questions in the Q&A or the chat for you as we've been going along. If we haven't answered everything, Florian will send them to us and we will respond and get it back to you next week to share with your members. And my last plea to members is, please think about coming into testing. It really is beneficial, hugely beneficial for you. Yes, it does something for us, but we've got thousands of people in now. This is really about you as individual agents. Get to know what's happening, get to know what's actually going to take time, what we have to do with your pricing model. And our commitment to you is that if you need help signing people up, if you come into testing, you have the dedicated customer support team. If you want more information about Making Tax Digital, speak to ICAST. We are more than happy to come back many times to give you the information that you need, give you that encouragement, and we will be with you to get into testing and get ready for the big numbers coming in next year. I think there's just under 800,000 coming into MTD for April 2026. Please do not leave it to the last minute. Get in early, get the information that you need, make your life and the life of your clients a lot easier.
Okay, Lenny, thanks for that. I'm just going to move on now to the Q&A section. Now, we have had a couple of questions, but obviously we are very short of time because of the initial difficulties that we had. I mean, a couple of them I think have been answered actually. We had one that said, if I have a client with a rental and a trade, would I have to put 2 returns in every quarter? And Rebecca has said, yes, that's correct, as these are 2 separate businesses. Yep, and then Derek said, when are client communications being sent to taxpayers? The majority of my clients have never heard of MTD and we're 10 months from implementation. And Nick said, letters started going out to nudge likely mandated taxpayers and agents in February 25, and the processing is ongoing.
Yeah. So obviously the decision year, tax year is 24-25, but that tax return isn't due until January 26, which is too late to tell people you're coming in April. So we are writing to clients based on 23-24 returns. So if for the last 10 years your self-employment income has been £100,000, unless something drastically changes, you are likely to be in MTD. So we're sending those letters out now. They're still going out, so your clients will get one. And then we will confirm with them when their 24-25 tax return comes in January. We'll confirm in February to say, yes, you are definitely in.
Okay, thank you. I do know that a lot of people have had to disappear because the webinar's run over. But I would appreciate it if everyone could that's remaining could just answer the poll questions, please, that might be coming up on the screen just now, if that's okay. Thank you. And I'll just move on to the next slide, which is about thinking ahead. We've got a range of events in the weeks ahead which you might wish to sign up for, guys. Links to sign up to all the events are available on icast.com/events as usual. And I think that's us for today. Thank you very much for all your contributions. I really appreciate it. Until next time, goodbye. Thank you.